Okay, next up we have Technology Metals Australia, who is a vanadium focused mining firm with projects in the Western Australia. So I would like to invite Managing Director Ian Prentice to present his slides.
Right, many thanks, thanks Jared, for giving us the opportunity. Technology Metals is a vanadium development company. We are aiming to be the world's next primary vanadium mine, and I'm going to give you a bit of an update now about what we're doing along that development pathway to deliver on that. So, I guess our overriding goal be one of the lowest cost, high purity producers of vanadium. So a producer of choice. This is a bit of a snapshot. We're located in Western Australia, as Jared said, Tier 1 mining location. We've got one of the largest, highest grade resources in the world, in vanadium, undeveloped resources in the world, and importantly got fresh ore at surface. We've completed a feasibility study late last year, and we're progressing through all of the requirements now to move that through into development. A quick snapshot on the company. Listed 3.5 years ago, we're still only got 122.4 million shares on issue, 3.2 million cash at bank at the end of June. So some similarities there with Jeremy, and also market cap around the $22 million mark. We've got a good balanced board and management team that's got technical expertise as well as financial market expertise, and importantly, we've got some vanadium operational experience within the team. So just on that location, sort of the Midwest region of Western Australia, fantastic logistics, great place to be building a mine. A whole lot of information there about all the key things that we've got around infrastructure. But I guess the bottom point is really important in current climate with COVID and what governments are doing to try and I guess get us out of COVID from an economic point of view. So we are a regionally and nationally significant development project. Vanadium is a critical mineral. We're going to be a large employer, and we're going to have a very significant export volume. So very, very important. I think we'll get significant government support for the development of this project. Snapshot of the outcomes from of last year's feasibility study. High purity, as I mentioned, greater than 99%, $4.04 operating cost. I'll touch on that a bit later on and how significant that is, but that is lowest quartile. We've got a current reserve of about 30 million tonnes at around 0.9% VTO5. We're in the process of updating that reserve. We did some work recently on a satellite deposit, which we've brought into our resource statement, and we're now progressing that through to reserve. So that mine life will extend, we believe, well beyond 20 years. And that's going to have significant impact on the operation. We think the cost will come down on the basis of that, and also our funding alternatives. So just a bit about vanadium. It's not the most commonly spoken about commodity going around, but it is a very, very important commodity for the global economies. Now, most of vanadium has historically been used in steel, and that is still currently the case. It's an alloying agent in steel. But more and more, we're talking about some of the specialty parts of the vanadium market. So specialty alloys, chemical category, they're all areas that require our high purity product. They're the areas where you get a premium pricing for your product. But also really importantly now is the emergence of the vanadium battery. So I'll touch on those a little bit further, but they're a really good, I guess, medium-term growth part of the vanadium market. So where is it produced and where is it consumed? You can see from these couple of charts, China is the largest player on both sides of that market, biggest producer and biggest consumer. Interestingly, when you look at the other players there, most of the production outside of China comes from South Africa and Russia, and some from Brazil, and there's some secondary production in Europe. But what we see is on the consumption side that Europe, North America, Japan and India are all net importers. So they're significant players on the import side of the market. So something that we'll be certainly targeting as customers. And really importantly as well, currently no production in Australia. We've got the 3rd or 4th largest resources of vanadium in the world, and currently no production coming from Australia. So the market is really tight at the moment, and it has been for quite some time. Other than the impact of COVID over the last 6 months or so, which has had an impact in Europe and North America particularly. China has bounced back significantly, and they're at a point now where the market is very, very tight in China, and the vanadium price is reflecting that. But you can see from that chart, there's a very large gap emerging in the supply-demand equation for vanadium. And that's where we see, as I say, we'll be the next large-scale primary producer to help address that gap in supply. Cash cost curve, this is a forecast cost curve. So this is really instructive. So you can see where the current vanadium price is in China. So it's around about $6.90, $7 a pound. Our OPEX at $4.04 a pound would put us as the fourth lowest cost producer in the world. Now, as I mentioned, we're doing some work that we expect will bring that down even lower. But it certainly puts us in a very, very good position. And on the far right of that chart, you'll see there is quite a significant amount of production that is still well above the current spot price in the market. So there is a significant pressure on the supply side and being able to maintain supply to feed that market. Interestingly, late last year, China became a net importer for the first time in 10 years. So it's a really interesting occurrence in that China has sort of flipped the switch there from being much larger consumer than it has been producer. We talk about the impact of COVID and the stimulus funding and what's going to happen in infrastructure, and all of that new infrastructure is going to require a lot of vanadium in steel to be effective. And then on the battery side, so we've got a couple of really significant vanadium redox flow batteries that are currently being built around the world, and these batteries are large consumers. Now, I won't get too much into these, but these are a grid scale battery, stationary storage, very significant long-term storage sources of energy. They don't necessarily compete head-to-head with the lithium-ion batteries, which are far more effective for your mobile devices, but certainly for grid scale. But really, certainly one of the best alternatives for storage of energy. So, just now onto the project. So, saw where we are in the Midwest of Western Australia. Talked about it already, world-class resource. We got a very simple open pit mining project, ore outcrops at surface. The reserve that we've talked about, we've just come out with an updated resource statement, which included the update of the southern tenement. And so we've now got 137 million tonnes at 0.9%. As I say, we're working on updating the reserve around that southern tenement, and that will build into the overall reserve position and push our mine life out. But also, very importantly, when we look at that long section of the northern block, which is the main area, which was the area that was included in the feasibility study, you can see the white dots there are the open pits that we've got designed for the feasibility study. We've currently only got 3 drill holes below those pit shells. So there's clear opportunity to extend the pits at depth. We're not going to do that drilling right now. There's no need to. We've got 16 to beyond 20 years of mine life, but that certainly is where we see clearly opportunity to take our mine life out to beyond 30 years. So very consistent, high-grade ore body, drill hole after drill hole keeps on hitting great mineralisation. So what does the southern tenement mean? So we've now, with that resource that we brought out just recently, we've now got our first indicated resource for that part of the project. That increases our overall measured indicated resource by 32%. So that's where we're very, very confident that it's going to give us a plus 20-year mine life once that reserve comes out in the next few weeks. But also, really importantly, there's the metallurgy from the southern tenement shows, I guess, a marginal improvement in what we can get from that area. So we get a higher grade magnetic concentrate coming through, and that's very, very important when we look at our processing side. So what it does do to us is provides us a bit more flexibility, and we think that's going to have a big impact on our feasibility numbers. One of the key benefits of our project is that high grade, what you can see in the cross section there, the dark red zone, the high grade layer, 15, 20 metres thick, consistently above 1%, and importantly at outcrops, and very importantly for our processing, we have a very shallow oxidation profile. So we're into fresh material very early in the mining operation, which again has a really positive impact on our cash flow, on our economics, because we don't have to process a whole lot of oxide material before we get into a really high yielding transitional and fresh material. And you can see the drill holes on the left hand side. We've done about 22 kilometres of drilling as part of our feasibility work. Of that, about 6.5 kilometres is diamond drilling. So we've been very focused on getting a really good understanding on the metallurgy through the diamond drilling, also the geotechnical parameters, and also getting a really good handle on the geology. Talking about grade, so from the DFS, we've got the first 12 years of throughput will be greater than 1%. That in the vanadium world, that is a very, very significant head grade. And with the, I guess, the inclusion of the southern tenement resource, once that comes into our reserve, we'd expect that 1% feed grade to extend out for another 4 or 5 years. So really, really important for that side of the feed. One of the things that we really focused on for this project is understanding the metallurgy. So one of the hiccups that you can have in vanadium is if you're not on top of the metallurgy, then you're going to have issues at the processing side. We've been doing metallurgy since our very first RC program way back when, and trying to get an understanding to make sure we've actually got something that we can produce a product from. Part of our feasibility study, we ran a pilot scale test through a kiln. So roasting kiln is the key component of our process. So we sent 7.5 tonnes of concentrate up to the US to FL Schmidt, who ran continuous roasting through their testing facility in Pennsylvania. And the beauty for us is that confirmed all of the bench scale test work, all the laboratory scale test work we completed was all confirmed by this continuous roasting test work that we did with FLS. Importantly, beyond that is that FLS were then very heavily involved in assisting in the design and operating parameters of the kiln for the feasibility study. So all those, I guess it's all around trying to de-risk the project as much as you can through a feasibility study project, and that's, I guess, the key of running this pilot scale test work. We've extended that FLS relationship, and we now actually have placed an order with them to provide the kiln. Subject to completion of a feed study, but they've got preferred supplier status with us, and we've actually entered into a contract for them to supply the kiln section of the processing circuit. The other key of any of these sorts of developments is your customers. We've been, again, very focused on talking to customers for a long time now. We've sent samples up into various customers, into the battery sector, into the steel sector. Started doing that about 2 years ago. Those little vials are samples that we've sent up to, samples of V2O5 that we sent up to customers. Now, what that means is we've now got between the 6,000 and 10,000 tonnes of our annual average 12.5 or 12,800 tonnes of product, either under binding offtake or MOU agreements, with the 6,000 tonnes being under take or pay, and then the balance being, I guess, an option with one of the battery groups to take an additional amount. So we've got a binding offtake agreement with China Non-Ferrous, so a blue chip mining house out of SOE out of China. So 2,000 tonnes per annum, which is around about 16% of our annual production. And then we've got another 24% with a steel, I guess, a steel alloy producer. And then, as I say, we've got an offtake agreement with Big Power, which is one of the top 3 VRFB groups in China, and a very significant player in the electrolyte business. So importantly, with that Big Power offtake agreement, we've also entered into an agreement to establish a joint venture to actually produce electrolyte here in Australia. So to take our vanadium through and do the downstream processing and enable us to leverage up into the battery sector. So it's a very important, I think, and one of the areas we see significant growth in the vanadium market. So what are we doing going forward leading into the start of the development? I've talked about the Southern Tenement Reserve estimation, and we expect those numbers to come out in the next few weeks, and we do very firmly expect that will come out with greater than 20-year mine life. We continue to engage with the vanadium market and looking at vanadium offtake, and as you saw in those earlier charts, there's a real need for vanadium supply, and so we fit very nicely into that. We've got a very strong relationship with government. We've got lead agency support from the West Australian government, and we're moving through the final phases of mining licence grant and the environmental approvals. Importantly, the West Australian government is a key player in the future battery industry strategy here in Australia. So the electrolyte business that we're talking about really fits neatly into that. Very engaged with the Northern Australian Infrastructure Facility, which has been providing some significant debt funding into these sorts of projects in the north of Australia, and so that's a really key part of what we're doing as part of our funding package. As I say, we've got some engagement with FL Schmidt around the supply of the kiln section of the plant. Importantly, FL Schmidt are a Danish company, and they've got a very strong relationship with the Export Credit Agency out of Denmark. And so again, we're going to look to leverage on that to help as part of the funding package and the whole strategy of how we're putting the project funding together. And I guess the final piece there is we need some gas for our operations. So we've got an engagement there with a gas supplier. So it looks like I've run out of time. So thank you very much for that. There was a sum up slide there, but it seems to have dropped off. But yeah, I think, highly leveraged to Vanadium. We've got the team in place. We've got the best project going, and we're moving towards development.
Thanks, Ian.